Welcome aboard, fellow navigators. You're watching Crypto Navigator, and if you haven't yet, make sure to click that subscribe button for weekly insights into cryptocurrency. Stay ahead of the market with us. Today's topic is very interesting, so let's get started. What is a smart contract? A smart contract is a self-executing program that automates the actions required in an agreement or contract. Once completed, the transactions are trackable and irreversible. The best way to envision a smart contract is to think of a vending machine. When you insert the correct amount of money and push an item's button, the program, the smart contract, activates the machine to dispense your chosen item. Smart contracts permit trusted transactions and agreements to be carried out among disparate anonymous parties without the need for a central authority, legal system, or external enforcement mechanism. While blockchain technology has come to be thought of primarily as the foundation for Bitcoin, it has evolved far beyond underpinning a virtual currency. 1. Smart contracts are scripts that automate the actions between two parties. 2. Smart contracts do not contain legal language, terms, or agreements, only code that executes actions when specified conditions are met. 3. Nick Szabo, an American computer scientist who conceptualized a virtual currency called BitGold in 1998, defined smart contracts as computerized transaction protocols that execute the terms of a contract. 3. History of smart contracts. Smart contracts were first proposed in 1994 by Nick Szabo, an American computer scientist who conceptualized a virtual currency called BitGold in 1998, 10 years before Bitcoin was introduced. Szabo is often rumored to be the real Satoshi Nakamoto, the anonymous Bitcoin inventor, which he has denied. Szabo defined smart contracts as computerized transaction protocols that execute the terms of a contract. He wanted to extend the functionality of electronic transaction methods, such as POS, points of sale, to the digital realm. In his paper, Szabo also proposed the execution of a contract for synthetic assets, such as combining derivatives and bonds. Szabo wrote, "These new securities are formed by combining securities, such as bonds and derivatives, options and futures, in a wide variety of ways. Very complex term structures for payments can now be built into standardized contracts and traded with low transaction costs, due to computerized analysis of these complex term structures." 2. Many of Szabo's predictions in the paper came true in ways preceding blockchain technology. For example, derivatives trading is now mostly conducted through computer networks using complex term structures. Smart contract uses. Because smart contracts execute agreements, they can be used for many different purposes. One of the simplest uses is ensuring transactions between two parties occur, such as the purchase and delivery of goods. For example, a manufacturer needing raw materials can set up payments using smart contracts, and the supplier can set up shipments. Then, depending on the agreement between the two businesses, the funds could be transferred automatically to the supplier upon shipment or delivery. Real estate transactions, stock and commodity trading, lending, corporate governance, supply chain, dispute resolution, and healthcare are only a few examples where smart contracts can be used. Smart contract pros and cons. The primary benefit of smart contracts is similar to the benefit of blockchain technology. They remove the need for third parties. Other benefits of this technology are: 1. Efficiency. They speed up contract execution. 2. Accuracy. There can be no human error introduced. 3. Immutability. The programming cannot be altered. Some of the downfalls of smart contracts are: impermanent. They cannot be changed if there are mistakes. 2. Human factor. They rely on the programmer to ensure the code is programmed properly to execute the intended actions. 3. Loopholes. There may be loopholes in the coding, allowing for contracts to be executed in bad faith. What is an example of a smart contract? The simplest example of a smart contract is a transaction between a consumer and a business where a sale is made. The smart contract executes the customer's payment and the business's shipment or transfer of ownership. What blockchain has smart contracts? Ethereum has smart contract capabilities inherent to its blockchain. The Bitcoin blockchain received smart contract abilities after its Taproot upgrade, which allowed it to communicate to layers that have smart contracts enabled on their blockchains. What are smart contracts in simple terms? Smart contracts are apps on a blockchain that make each side of a transaction complete its part. For example, a smart contract could initiate a fund transfer with a third party when the transferor signed an agreement. The bottom line: Smart contracts are code written into a blockchain that executes the actions two parties agree to outside the chain. By automating these actions, the need for an intermediary or trust between the parties is removed. This is your captain signing off. If you enjoyed our crypto journey today, make sure to hit that subscribe button and join us again for more updates. Thanks for watching, and keep navigating towards success.